Welcome back. If you're new to the channel, my name is Larry Chung, CFA. Today we're talking about meme stocks, specifically Blackberry. Blackberry has risen from the ashes in the last several weeks, up 100%. And that leaves investors and traders wondering, is it time to take profits or if it's just the beginning? If you want an informed opinion and timely updates on Blackberry, make sure to hit that subscribe button below. In today's video, we're going to be talking about Blackberry in three parts. One, a quick overview and company history of the fundamentals of Blackberry that you need to know before investing in the company. Number two, we're going to talk about the media attention that Blackberry has been receiving from Wall Street bets on the Reddit community and whether that means the stock has more upside from here. And number three, we're going to talk about where I think the retail momentum can bring Blackberry stock in the short and intermediate term and what I plan to do with the company stock in the coming days. So let's get started with an overview of the company's history and a fundamental overview of the stock. Back in 2016, Blackberry decided to completely exit the smartphone industry, and in turn, they entered the cybersecurity and enterprise software space. In terms of their stock price, since they made that decision, the company's stock has struggled to compete against the likes of Microsoft and Google in enterprise software. That said, there are a couple metrics that we should focus on to understand the promise of Blackberry's future. So, they currently make about $1 billion in sales in their new business model. Their latest quarter came in at roughly $210 million, which was somewhat soft compared to Wall Street expectations. But compared to their previous business model, their gross margins are now north of 70% because it is now a data licensing and software business. In terms of institutional interest, Vanguard doubled their position in December of 2020. And also the Warren Buffett of Canada, his name is Prem Watsa, he's the CEO of Fairfax Financial, he decided to keep his 8% stake of the company despite the company's share price rally. Now, Blackberry also owns 38,000 patents, which are currently valued at about $450 million. Some other lawsuits that are happening in the background include Blackberry's recent settlement with Facebook that could end up netting the company anywhere between $1 billion and $5 billion based on various sources. Keep in mind that Blackberry's current market cap is around $9 billion, so a settlement that is over $1 billion will give the company lots of runway for its future product development and its market expansion. In terms of its valuation, Blackberry is trading at 10 times sales compared to its 5-year average of roughly 4.9 times sales. Now, that could be explained because of its product development promise. You can see here that about 96% of all enterprise cybersecurity threats can be secured through Blackberry software, which is very promising because cybersecurity is a growing space that a lot of companies are investing in today. In addition, you can see that Blackberry's QNX flagship software is installed in over 175 million cars out in the marketplace today. What that means is Blackberry software continues to gain prominence and importance as the automakers industry expands. Back in December of 2020, Amazon and Blackberry jointly created a new partnership called Blackberry Ivy, and this kind of software is going to be used in future electric vehicle production for their cybersecurity software. This is an extremely important point because by 2025, market research estimates say that 10% of all new cars sold by 2025 will be EV cars. And that means that Blackberry is going to be a stealth supplier to security software in those cars. And as the EV market expands, so will Blackberry's market opportunity and their revenue potential. I see the development between Amazon and Blackberry's Ivy partnership to at least create a floor for Blackberry's share price going forward. Now let's visit the question of whether all this attention from Wall Street bets is going to drive the stock much higher. I believe the answer to that is yes, and here's why. You can see here that Wall Street bets now has over 10 million hyperactive users, and in the latest report, 7 out of the last 20 top posts were mentioning BlackBerry. And this is very important because as more and more Reddit users get familiarized with BlackBerry and the stock narrative, some users are going to be posting information about fundamental analysis on BlackBerry on Reddit. And what this does is it creates a discovery process for Reddit users to understand the company's upside and the downside, so when they enter the position with a greater understanding of the company's fundamentals. This will support the culture of diamond hands and allow people to understand the volatility, the upside and the downside price action without this instantaneous urge to sell on any given dip. Previously, when GameStop and AMC were surging in the marketplace, a lot of people on Wall Street Bets were simply promoting the stock without really discussing much of the fundamental aspects of those companies. The posts on BlackBerry are a little different. A portion of them do deep dives into the company's history, the company's cybersecurity technology, and even the product rollouts of the future. And for serious investors, people who look at this type of research end up believing the company and will end up holding the company for a longer period of time rather than just flipping the company for a 10% profit. In addition, all this media attraction from Wall Street Bets is likely to have BlackBerry mentioned on more media sources such as Bloomberg, Barron's, Yahoo Finance, and Investors.com. And this is going to further branch out BlackBerry's brand and their stock narrative to further retail investors. But not all attention is positive, and here are some bear cases that you want to know if you're going to invest in BlackBerry. Number one, if a company's stock has a lot of attention, that means it's going to attract both sides of the coin, bears and bulls. And in this case, there are a lot of professional investors on Seeking Alpha, the hedge fund community, and institutional investors who will publish bearish reports on BlackBerry because, truth be told, there are aspects of misalignment between the current stock price and the true valuation of the company. Therefore, you could see more hedge funds and institutional investors attempt to short the company, buy puts in order to bet against the downside. All of these media reports of BlackBerry surging will also, for example, create a self-fulfilling prophecy of pullbacks and declines as other professional investors take the other side of the trade. Now that we've talked about the fundamentals and whether the media attention matters, let's talk about what I plan to do with the stock. When we look at the 12-month chart of BlackBerry, you can see that there is significant support at the $8 mark. What that means is if we were to purchase the stock today at $15, in the worst case scenario, we could safely anticipate that the stock could retrace all the way back to $8 a share, which would result in roughly a 50% loss. Now that we understand that the downside is roughly 50%, let's talk about what are some upside scenarios. You can see here that meme stocks defy fundamental analysis. Meme stocks is a lot more about emotions and a lot more about technical analysis. And you can see here that if Reddit traders get really emotional and really excited about the stock, there's a chance that this crowd could push BlackBerry back to $25 a share and possibly $30. And should it break out from that perspective, you can see that some of the most aggressive price targets for BlackBerry could include even $50 a share or perhaps even $100 a share. None of these price targets make any sense from a valuation perspective, but in investing and in the stock market, where the stock's market capitalization is small enough for retail investors to move the price of the stock, it's possible that these price targets could be achieved. So what I'm doing with this position is this. I recently started a position in BlackBerry. I'm long. I purchased 500 shares at roughly $16, understanding that my maximum downside is close to about 50%. But I think about it this way. It's one part of my portfolio, and remember, asset allocation and diversification is very important. BlackBerry is one part of my portfolio, and I see it as a more speculative play in my portfolio. Now, Some people might think this is not true investing. Some people might think this is not real fundamental analysis. Here's how you want to think about these kinds of stocks as it relates to your portfolio. There are portions of your portfolio that should be, for example, blue chip and steady growth, such as Facebook, Google, Amazon, and Apple. Another portion of your portfolio can be dividend stocks, such as Coca-Cola, Chevron, ExxonMobil, and other great dividend companies. Some parts of your portfolio, depending on your risk tolerance, can be allocated towards high growth potential stocks or speculation. And Blackberry is a great company for that purpose because it does actually have some great fundamentals that we discussed. And the stock narrative, which is likely to be continued to shown to more and more retail investors, is only going to increase retail interest in this stock. So given that understanding, I'm perfectly comfortable with this position. Now, if the stock does go to $25, $30 a share, I plan to probably reduce a portion of it, but really, because it's speculation, I probably will hold on to the stock and see how it goes. But as a reminder, asset allocation and diversification is extremely important. So I just want to emphasize that Blackberry is a great company to put on your speculative watch list, but I urge you to not go all in on these types of stocks. I'm in it, and if you're in it, let's make some money together. But please do not go all in on these speculative positions because you never know what will happen. Now, with that said, subscribe for more updates on Blackberry, and make sure to follow me on my Seeking Alpha account because I will be actually publishing a report on my thoughts on Blackberry, the fundamental analysis behind it, the narrative supported by Wall Street Bets, and ultimately an update on my stock positions going forward. So make sure to subscribe to my YouTube channel and my Seeking Alpha below. And before you leave, just make sure you comment below, what are you doing with Blackberry stock? Are you holding, are you buying, or are you selling? And I will see you in my next video.